Hello, I'm Finola Burke from Research as a Service, and today we're speaking with Joe Hanna, the Managing Director and Co-founder of PropTech Group, ASX ticker PTG. Thanks for joining us, Joe.
Thanks, Finola. Thanks for having me.
Now, you reported a 70% increase in Q3 cash receipts to 5.32 million and positive operating cash flow of 0.43 million. Congratulations. Can you take us through what the key drivers of that growth were?
Yeah, absolutely. So we've consistently been able to grow both the number of customers that we have, unique customers using at least one PropTech Group product, and the average revenue per account as well, primarily through an increase in number of products per account. That trend has continued in the last quarter, so thankfully we've seen an increase from previous year, and that should continue moving forward as well. But primarily the drivers were more customers paying more money.
And as you said, your ARPA and your unique accounts both grew by around 30% in the quarter. Where do you feel PropTech is in terms of its opportunity?
Oh, look, absolutely in the very early stages. It's important to note that our direct addressable market, i.e. the real estate agencies that operate in Australia and New Zealand, and to a lesser extent the UK, who are focusing purely on Australia and New Zealand to start with, spend over $730 million a year on PropTech SaaS subscriptions and related services. Given that we have a large market share by number of customers, we know that they spread across at least 10 to sometimes 30 different PropTech subscriptions of unique product subscriptions. So ultimately, given that we have a large penetration by number of offices, we're still very much at the very early stage of just scratching the surface by number of products. At the moment, we have over 5 unique products that we can sell. We're tracking almost at 2 products per customer at 1.91 as we released in the last quarter. And we want to push that up. So as we release new products, almost releasing them monthly, then we want those products per customer to increase. Again, the biggest target for us is ultimately a real estate agency office spends about $60,000 a year across 10 to 20 different products. We want to get at least 10 or 15 of those products coming through PropTech Group.
And in part, your growth has come from acquisitions, Joe. Are you seeing opportunities for M&A in this market?
Oh, look, absolutely. We know that our primary products, those core software solutions that agencies depend upon, namely their sales CRM and property management system, are essentially the systems that agencies rely upon all day, every day. Now, by that, I mean, it's the source of truth. It's where the data entry is actually going in for agencies. So all these other PropTechs at some point need to push data into or suck data out of those CRMs and property management systems. This represents and presents really good deal flow for us. Ultimately, we have a build, buy, or partner strategy, and the buy part is a significant part of that strategy. So yes, absolutely, there's significant opportunity to continue to grow that top line revenue, most importantly, the products per customer through acquisitions.
And you've been able to grow quickly without burning too much cash. Do you expect that to continue?
Definitely. I think there's a strong commitment from the board and management to remain profitable on an underlying EBITDA basis. That's been a directive that we've been very passionate about and will remain passionate about. But given what we're seeing in the capital markets at the moment when it comes to tech stocks, then I think that's an important thing for us to do for the foreseeable future, no doubt.
Well, Joe, thank you very much for taking the time to speak with us today. I'm looking forward to checking back with you in a couple of months to see how PropTech Group is going.
Thank you, Finola. Appreciate that.